Good morning, this is Bloomberg Daybreak Europe. Happy Tuesday. I'm Tom Mackenzie in London, and these are the stories that set your agenda. The sell-off deepens. The MSCI Asia Pacific Index slides below its 50-day moving average for the first time since April, with US and European futures pointing to further losses later today. Bitcoin tumbling to a 7-month low. Japan steps up diplomatic efforts to ease tensions with China after a backlash over Prime Minister Takaichi's comments on Taiwan. Plus, the US gives the go-ahead for Saudi Arabia to buy F-35 fighter jets. This ahead of today's meeting between President Trump and Crown Prince Mohammed bin Salman. Plus, we are live at the Dubai Air Show and the Bloomberg Africa Business Summit with guests including the Emirates President and JP Morgan Chase COO Daniel Pinto. So stay tuned for those conversations as well. So there is anxiety rippling through the equity markets. You saw that reflected in the session on Wall Street yesterday, with the S&P 500 closing down 1%, the Nasdaq 100 falling by about 0.8%, and the futures picture looking rough today as well. An ugly picture across the board. The Asian session has been challenged. Just look to Japan, and we'll unpack that story for you shortly. European futures then pointing to further losses of 1.1% as we lead up to the open, 8 a.m. UK time. FTSE 100 futures looking to drop 113 points. S&P E-minis pointing to losses of 0.5%, and the Nasdaq 100 futures looking at losses 147 points. Tech was a pressure point yesterday. The concerns about the AI trade, the build-up, of course, to Nvidia earnings on Wednesday, and then, of course, the jobs data on Thursday. Anxiety across these markets, and as yet not finding a floor. There is money moving into treasuries as investors seek havens. The 10-year is bid at 4.11, yields down 2 basis points. Yields fell lower yesterday as well. So building on that trade today, euro-dollar at 1.15, largely unchanged. The currency at the moment really is the yen, and we'll get to that shortly as well, with a weakness in that currency. Bitcoin at 90,000 had crossed below this, and so further losses in the crypto space, currently down a full 2%, and gold at around $4,000 per troy ounce, lower by 0.7%. Gold also hit, of course, by expectations, or at least the debate as to whether or not the Fed can go in December. Traders now paring the bets below 50%, the odds, the chances of a rate cut in December, if you look at the work function on the Bloomberg terminal. Let's cross over to Asia right now. It's been a very tough day there. Winnie Su standing by in Hong Kong. Winnie, talk us through the market action in Asia.
Yeah, morning, Tom. It is quite an ugly day for Asia today. Specifically, we are seeing steep losses in the Japanese market. We've seen the Nikkei 225 actually lost about 3% earlier today, and also losses seen in the bonds as well. So it's really showing that overall the risk sentiment in Japan has been quite low. A couple different factors come into play. It's that worries around the tech valuation and also government spending, and not to mention that ongoing tensions between China and Japan. Yes, Japan has sent a senior diplomat official to China, so we are closely monitoring the development there. But also to highlight, the Japanese yen still right now crossing that 155 level, and the finance minister is strengthening her warning against the weakening currency. Now, zooming out, we take a look at how it is going on with the broader Asia market, because overall it is quite a steep sell-off as well. Here you can see as the chart, which you mentioned earlier just now in the show, that Asian stocks, the MSCI Asia, has breached that 50-day moving average, and it's that very first time it breached that level since April. So really showing that a lot is weighing on the overall equity space, and with that, it's also amid that broad sell-off in the cryptocurrency ahead of Nvidia earnings and ahead of key data from the US. So technology shares really leading losses here in the region, as we see investors start to prefer more defensive names, including utilities and consumer stocks. Now, we take a look at what's really a positive news here in the region, because we are seeing that a very successful IPO here with Pinkfong, which is that creator of the very famous Baby Shark video. It is the most popular video on YouTube with about 16 billion views so far, and stocks was up as much as 60% earlier today on its IPO, but now still up about 7%. So it's really showing that appetite for Korean entertainment remains very solid. Back to you, Tom.
Okay, Winnie, thank you very much indeed. I'm just glad we didn't play that video, quite frankly. Out of Hong Kong, Winnie, thank you very much indeed with a check on the Asian markets and that IPO as well. Baby Shark in focus. The sharks are out as well when it comes to these equity markets. As you think about Nvidia and you think about the jobs data that comes on Thursday, of course, Nvidia's earnings tomorrow will test investors' nerves ahead of the delayed US jobs report due on Thursday. Fed Governor Chris Waller says current data supports a rate cut next month.
This reading of the data leads me at this moment to support a cut in the FOMC's policy rate at our next meeting on December 9 and 10 as a matter of risk management.
OK, so that's Chris Waller on his views around December and the need for a rate cut. Of course, the divisions are there amongst FOMC members. Worth noting as well that Chris Waller is one of the contenders for the top job at the Fed next year. Let's bring in our markets reporter, Valerie Teitel, who has a finger on the pulse of the downside that we're seeing across these equity markets. Val, what is going on? Is this a healthy correction or start of a deeper sell-off?
Well, look, I think we have to wait till Nvidia earnings in order to call that. But the Nasdaq has now retraced around 6% from all-time highs back in October. So not a total disaster, but we are making our way to a 10% correction. If those Nvidia earnings come in soft, really opens the door to tech trading week, frankly, into year end. But I do want to tie this in to the monetary policy story. We're hearing from Governor Waller there supporting the case for a December rate cut, because yesterday, essentially, the equity market weakness started when we heard about the Amazon bond sale offering. They issued around $15 billion across the curve, and the tech trade is now becoming more dependent on fixed income. It has now reached a level where they're going into debt in order to fund this expansion. So essentially, it's now tied to fixed income. It's tied to Treasury yield levels, and it's tied to how hawkish or dovish the Federal Reserve is. Now, we had a hawkish central bank decision. We've had hawkish members putting that Fed cut in doubt, and that leading the tech trade to essentially give these wobbles underneath all of this. Now, I have to mention that in this risk-off mood of the last 24 hours, we are seeing a bid into bonds into the front end. So those two-year yields are bid against today, down around 3 basis points. But again, the odds of a December Fed cut have dropped to around 45%, and that is a steep departure from where they were just a few weeks ago. You know, back at the end of October, we were nearly pricing 100% probability that the Fed would continue their cutting cycle in to December.
OK, so a significant shift in terms of expectations for December, despite what Chris Waller has been saying on his views for the need for a cut. And of course, that is tying in to the sentiment around Bitcoin as well. Crossing below 90,000. The sell-off continues. In the session today, we're back below 90,000 right now on Bitcoin, 89,862, down 2% in the session.
Yeah, lowest level in 7 months for Bitcoin. And 90,000 was talked about as being a really key level, because we look at ETF inflows, which are most of the retail holders of Bitcoin. The average entry point was around 90,000 for those ETF holders. So triggering a move below that is really opening up some more downside weakness. Now, all this maybe depends on the macro backdrop. Bitcoin has now paired its gains from that October 6th all-time high of around 125,000 to now all the way below 90. That's around a 30% drop in a really short time frame, Tom. Now, we are in the red year to date as well for cryptocurrencies, and this is maybe astounding some given the really positive regulatory backdrop around cryptocurrencies under the Trump administration, that we're continuing to see it trade so sensitively to the hiccups in the Nasdaq in the last few weeks.
Yeah, to your point, some bets on 80,000 being the next level for Bitcoin as it crosses back below 90,000 in the session today. Valerie Teitel, thank you very much indeed on a big market. Big day, of course, for the equity markets, moves into treasuries, benefiting on the risk off, but also the downside coming through for the crypto space once again. Let's break some news for you. We've got some updates coming through in the banking space, and then we'll get to the chemicals and paint space as well with AkzoNobel. Let's start on Credit Agricole, though. We've had a strategic update targeting, and the Credit Agricole, the second biggest French bank, listed listed French bank, and this is the first strategic plan under the new CEO. The bank is now targeting net income of more than 8.5 billion euros. That's by 2028, on expectations for strong business growth outside France. So again, that is a strategic update coming through from the new CEO of that lender. Let's bring you some other lines from Credit Agricole. In terms of return on tangible equity, they are targeting 14% by 2028. But it's the net income target that is front and centre, to exceed 8.5 billion euros in 2028. That's a stock to watch. Let's move on to Amundi, of course, another financial player, in terms of some updates coming through for this French bank, targeting 2028 earnings per share of over 7 euros. They are targeting a payout ratio of at least 65% over 2025 to 2028. They're also going to be taking a stake in ICG as part of its new strategic plan. Amundi announcing a strategic and capital partnership with Intermediate Capital Group, also outlining its financial objectives through 2028. They are planning to take a 9.9% stake in ICG, which is the London-based private equity and credit specialist. That line coming out from Amundi, another stock to watch. Let's move over to AkzoNobel. This is an all-stock deal with Axalta, which is one of their competitors in the paint space. They will be combining in an all-stock deal. This will also involve paying a special dividend. So beyond the deal, AkzoNobel will pay a special cash dividend to holders of around 2.5 billion euros. Axalta holders will get 0.65 shares of AkzoNobel stock. So again, this is an all-stock deal. AkzoNobel combining with Axalta. It's another stock for you to watch at the open, 8 a.m. UK time. Now to geopolitics. Japan mounting a broad diplomatic effort to ease tensions with China after Prime Minister Sanae Takaichi linked a Taiwan Strait crisis with the possible deployment of Japanese troops. The comments sparked a sharp backlash from Beijing that raised fears of a breakdown in economic ties. Bloomberg's Hong Kong news desk editor Balash Pence joins me now. Balash, give us the update then. Will the Japanese Prime Minister ultimately retract her comments? That is what China wants, a retraction of these comments. Is that going to happen?
We don't know what might ultimately happen, but it doesn't seem likely right now that she would retract her words. Just remember that, as we heard, Japan is right now focusing on these diplomatic efforts. We heard that there are a number of channels they're trying to deploy to kind of lower the temperature. But domestically, Tom, it would be very difficult for her to fully walk back those statements. She was elected prime minister less than a month ago on a platform that put her forward as a strong leader, someone who leans more on the nationalist side. There's a reason why she was the first Japanese leader in decades who addressed the issue of Taiwan. And her cabinet right now enjoys a 70% approval rating. So right now, her calculus very well might be that at this level of Chinese pressure, she might be able to ride out any potential economic fallout.
OK, and what of that economic fallout, Balash, which industries could be most affected if these reprisals from China continue? They've already taken some measures, of course.
That's right. The first thing they did was a travel advisory, and that's the quickest, easiest thing they can reach for into that huge Chinese tourism into Japan. Chinese and Hong Kong tourists make up about 10 million of those visitors to Japan this year. So that could be a large effect. If they go further, if they escalate those economic measures further, they might target industries like Japanese automakers who rely, like so many other auto companies around the world, on Chinese materials, specifically rare earths and critical minerals. That would increase the pressure on Japan even further, and that might change the calculus for Takaichi.
Bloomberg's Balash Pants, thank you very much indeed with that important update. We continue to watch and monitor that story for you, of course. Balash, thank you. Here's what else to think about today then before the bell. Home Depot earnings, so a touch on the US consumer as you see some gauges of US consumer sentiment edging lower, of course. So important earnings coming through from Home Depot in terms of a finger on the pulse of the US consumer. And at 1:30 p.m. we get ADP weekly employment data, so another gauge of the jobs picture in the US ahead, of course, of the non-farm payrolls that drops on Thursday. That's the September data, of course, that will drop on Thursday. But before that, we get the ADP numbers today. And also today, Mohammed bin Salman of Saudi Arabia, of course, will be at the White House. That's after President Trump said Saudi Arabia could purchase F-35s from the US. So that's an important meeting, of course, in the White House later today. We'll bring you coverage. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to Go on the terminal. The sell-off across the equity markets, of course, from Asia, the US to Europe, is the key story on the Bloomberg Daybreak coverage this morning. All the details, all the context, all the analysis is there. Coming up, as Boeing racks up some early wins in orders from the likes of Emirates, we're going to check back in on the mood on the ground at the Dubai Air Show. Guy Johnson is there for us. Plus, plenty of big guests from the Air Show and the Bloomberg Africa Business Summit. Don't miss interviews, including with the Emirates President and JP Morgan Chase COO Daniel Pinto. Earlier, we used an incorrect picture of Daniel Pinto. This is the correct one. Also coming up, the UK's wealthiest rushing to lock down their fortunes. More on how they're bracing for possible tax hikes ahead of the government's upcoming budget. That's later in the show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US President Donald Trump says he will approve the sale of F-35 fighter jets to Saudi Arabia. It's a major concession to Crown Prince Mohammed bin Salman. MBS set to meet Trump at the White House later today as Washington and Riyadh look to strengthen ties.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia? I mean, and also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning on doing that. Yeah.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
Lockheed Martin's F-35 and the Russian United Aircraft stealth fighters, meanwhile, have been competing for Middle East defence budgets in a rare flying display at the Dubai Air Show. Let's go straight there, as I'm joined now by Bloomberg's opening trade anchor Guy Johnson, of course, who's on the ground and may have witnessed part of those displays. Guy, let's start with the F-35 sale that President Trump says he will be signing off on. We know there's a long process to actually get them into Saudi Arabia. How significant do you assess this move to be, Guy?
I think it's really significant. You think about it, the Israelis are already flying the F-35, and President Trump was referencing what happened with Iran a little while back. The F-35 was involved in that attack on Iran, and now we are going to see a more balanced picture potentially emerging within this region, within the Gulf, as the Saudis take possession of the F-35. It's likely to be slightly different, obviously, to the one the Israelis took possession of. The Israelis may be slightly tweaking their version, but nevertheless, this is a huge moment for this region as it gains some of the most cutting-edge technology that the United States has to offer. Lockheed Martin, I can actually see a mock-up of the F-35 just in front of me here. This is a dominant aircraft. It was dominating yesterday as it did the flypasts, and it's likely, with the Saudis in possession of it, to have a major impact in terms of the balance of power within the Gulf region, Tom.
And meanwhile, Guy, you're monitoring, of course, the deal making at the air show, and Boeing scoring a win from Emirates. I mean, is this sizable? And what else is on the agenda? What else are you watching for?
Yeah. It was a huge order yesterday, in many ways a big surprise yesterday. Emirates, Sir Tim Clark, the president of that airline, ordering more 777Xs. Now remember, this is the program that Boeing is having so many problems with right now, and only recently, only a few weeks back, pushed into 2027 and took a huge charge. So Boeing is struggling to deliver this plane, yet Tim Clark thought this the right moment, maybe to order more of them, maybe just reinforcing the need to get this program back on track to deliver this aircraft. He probably got a fairly good price for those aircraft as well in terms of what he paid for them from Boeing. But it puts Airbus in a really interesting position. They've got a competing aircraft, the A350-1000, which has been troubled by engine issues with the Rolls-Royce engine that is the single engine option on that aircraft. And the big question today is, will Sir Tim also order the A350-1000? I'm going to be catching up with him very, very soon. We'll maybe get an answer to that question. We're potentially also looking for an order today coming through from Fly Dubai. That could be a split order as well between Boeing and Airbus. Another breakthrough potentially for Airbus today, Tom.
OK, Bloomberg's Guy Johnson on the ground for us at the Dubai Air Show on the deal-making, of course, and on the significance of that F-35 potential sale to Saudi Arabia. President Trump says he will agree that. Guy, thank you. Plenty of big guests, of course, from the Air Show and the Bloomberg Africa Business Summit through the day. Don't miss interviews, including the Emirates President and Daniel Pinto from JP Morgan Chase, who is the bank's Vice Chairman. Also coming up, we are live at, as we've mentioned, Bloomberg's inaugural Africa Business Summit in Johannesburg. We're going to hear from the CEO and Managing Director for Sub-Saharan Africa at logistics giants DP World. Amid trade tensions, that is an important conversation. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Turning now to the Bloomberg Africa Business Summit. Speaking at the inaugural event, the CEO of the South African Public Investment Corporation says it is in talks with sovereign wealth funds to co-invest in the rest of the continent. Let's bring in Bloomberg's Lizzie Burden, who joins us live from Johannesburg. Lizzie, talk us through the highlights then.
Hello from Johannesburg, Tom. Good morning from Babs, as we're affectionately naming the Bloomberg Africa Business Summit. Of course, we're here ahead of the G20 and the B20, South Africa holding the presidency at the moment. And it's such a crucial time, Tom. As you know, on Bloomberg Tech Europe, we are in the midst of this AI boom, and it's powered by young people who are not in short supply here in Africa. It's the youngest, fastest growing population on the planet. And of course, that AI being powered by rare earths, precious metals as well, not in short supply either here on the continent. The US and China battling for them. So it is a crucial opportunity for Africa. We've got some key conversations for you. I'm going to be speaking to Hendrik du Toit, the CEO of 91, South Africa's biggest fund manager. I'm also going to be speaking to Jonathan Oppenheimer, whose family, of course, built Anglo-American and De Beers into the mining powerhouses that they became, and now he's a key figure in the investment landscape. And I'll be speaking to Alex Okozie, the managing director for Google here in Africa, about that race on AI between the US and China on the continent. I'm really interested to hear what his strategy is to penetrate the market. But Tom, I've already had some fascinating conversations. Just want to play you a bit of what DP World was saying earlier.
We are deploying that in ports. We are deploying that in logistics infrastructure because we see that Africa's role in trade needs to be much bigger. You know, Africa represents less than 3% of global trade. Intra-Africa trade is about 10%. And we believe one of the key enablers to trade in Africa is investment in infrastructure, investment in logistics platforms.
So plenty more to come, Tom, from Johannesburg. Terminal users can follow along by going to Live Go on the terminal.
Bloomberg's Lizzie Burden on the ground for us. And in Johannesburg, of course, at the Bloomberg Africa Business Summit. Lizzie, thank you very much indeed. A lot more coming up from there, of course. Worth following on the terminal and on Bloomberg.com. Of course, on Bloomberg TV as well. Coming up, investors questioning Deutsche Bank's bullish new targets. We'll bring you the details on the German lender's plans into the future. That's coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The sell-off deepens. The MSCI Asia Pacific Index slides below its 50-day moving average for the first time since April, with US and European futures pointing to further losses later today. Bitcoin tumbling to a 7-month low. Japan steps up diplomatic efforts to ease tensions with China after a backlash over Prime Minister Takaichi's comments on Taiwan. Plus, the US gives the go-ahead for Saudi Arabia to buy F-35 fighter jets. This ahead of today's meeting between President Trump and Crown Prince Mohammed bin Salman. Let's get to the markets then. The equity market sell-off continues. The rout is there. We'll see how prolonged this is, of course. Is this a healthy correction or the start of a more pronounced sell-off then? After the losses of almost 1% on the S&P 500 yesterday, NASDAQ closing down 0.8%. And the futures picture looking to build on those losses. European futures pointing low by 71 points, down 1.3% right now. FTSE 100 futures over in the UK. Here in the UK, of course, pointing low by 116 points. S&P evenly then pointing low by 0.5%. The S&P 500 down more than 3% since the end of October, closing below its 50-day moving average for the first time in 139 sessions yesterday. NASDAQ 100 futures low by 171 points. Let's flip the board and have a look cross-asset. In the search for safe havens, treasuries are bid. You're seeing yields down across the curve. 410 right now on the US benchmark 10-year. Yields down 3 basis points. Euro dollar at 115. The yen is the currency of the moment with the weakness there and the significant sell-off in Japanese equities. Bitcoin at 90,000, just crossing back below that now at 89,000, down a full 2% as the crypto rout continues and traders bet on potentially 80,000 being the next level for Bitcoin. Gold at $4,000 per troy ounce, also weaker by 0.8% on concern that the Fed will not go with another cut in December. We know that debate remains live. Chris Waller saying he wants to see a cut next month. Let's bring in, at this point, Camille de Courcel, head of Developed Markets Rates Strategy and European Economics at BNP Paribas Markets 360. For a view on these markets, specifically, of course, around what's happening in the fixed income space and the broader macro picture. Camille, thank you. Of course, there's a big focus this week on what's happening with Nvidia, earnings dropping tomorrow, but then the US jobs report on Thursday, backdated as it is, of course, to September. Just broadly on the market moves that we've seen over the last 24, 48 hours, your take on what we're seeing?
Well, it's hard to say if it's really the start of a prolonged correction, but as we've heard from many important specialists, valuations have been too expensive, so it might be just a due correction. The key question is whether that extends a lot more from here or not.
Part of the anxiety is whether the Fed goes in December and markets pricing in less than 50% chance that will happen. You think Jay Powell persuades the FOMC to get behind a cut in December? Why?
So we think that indeed, because we think, at the end of the day, the data has remained relatively resilient, and yet the Fed decided to cut. It's a risk management cut. And that's what the Fed has done in September and in October. So we think December will be, once again, risk management cuts as the Fed is still in restrictive territory. So the data has been, let's say, sufficiently balanced to still allow the Fed to deliver another risk management cut.
How would that adjust your views then? They go in December, is your view. As you project into 2026, how does the Fed synchronize its reaction to this US economy?
So then we think that the Fed will probably slow down because it will be closer to what they expect to be neutral. So we would expect another 2 cuts, so March and June. The Fed will still have to, manage to balance the inflation risk on the one hand, labor market risk on the other hand, but we still expect the Fed to be much more concerned by risks in the labor market rather than inflation. So as long as tariffs inflation does not accelerate too much and much more than we expect, we would still expect the Fed to deliver those other 2 cuts. But the neutral rate and where that is will be key for the lending of the Fed.
And that debate is live as well amongst the FOMC. Where does that leave US Treasuries? Where would you want to be positioning across the curve? Where are the opportunities in US sovereign debt at this point?
Yes, so we prefer to be positioned in the belly. So let's say front end to belly of the curve, whereas further out on the curve, I mean, very front end maybe is not as appealing because the market is pricing a lending which is very low still. And so compared to the risk of where neutral might be, there could be upside risks. So the belly of the curve for us is where there is a stronger case to be long, whereas further out on the curve, the risk would be indeed if inflation start to reaccelerate more strongly and the Fed continues to cut in this context and the economy remains resilient, then you run the risk that the market start to price a Fed which is less credible. And so five-year inflation, which has been very well behaved because the Fed is credible, could start to reprice to the upside. And that's where you could have a sell-off again at the longer end part of the
which
curve.
is the rationale for staying in the belly of the curve when it comes to US Treasuries.
Yes.
You talk about the resilience of the US economy. How much clarity do you think you have, you and the team, around the labour market in the US right now? And does the September jobs report that drops on Thursday, does it change that? Does it add information? And do we end up with a clearer picture on the health of the labour market by the end of Thursday?
Not really, because it will be backdated to September indeed. And in September, we all know the Fed cut rates. So we think that it will be seen as tail by the market. So we don't think that the market will react much to that. In the meantime, we have the ADP report. So if you look at this sort of data, it does not look like there is any non-linear cracks in the labour market, but of course it remains to be seen. We think key for the market will be more the October and the November NFP report, but we think that this might be only published until after the December FOMC meeting.
I want to get your views on the UK. The budget, of course, next week, November the 26th. What assumptions are you making about this UK budget and how much is priced into the gilt market?
So considering the volatile news that we've had in the media recently, it looks like there might not be an income tax hike, which was our expectation. But we still think that on balance, it will be a credible budget. What will be key will be for the fiscal headroom to increase. So we would expect
to be clear,
the buffer.
the fiscal headroom is key for the gilt markets.
Yes, like the buffer, like we would expect instead of 10 billion, we would expect an increase to 15 to 20 billion. And that will be key to make the government more credible.
Anything below 15 billion, do you see a sell-off?
If we remain at 10 billion as it has been, we don't think it will be very credible, and it makes any decisions and the market in particular.
What would the gilt market reaction be to a headroom of 10 billion or less?
We would expect a further sell-off, especially at the long end.
But that's not your base case.
This is not our base case. No, we would expect income. So for the income tax, we think that the threshold can be changed. We also think that it could be frozen so that you still earn more tax on that. There is also other areas, for example, gambling tax, potential for mention tax as well. So more tax still. And then there is also, we still expect a disinflationary impulse from the budget, which is also very important to cement the case for more cuts from the BOE and to support the front end of the curve.
Okay, and you expect the BOE to cut in December?
Yes, absolutely.
Okay.
The data in the labour market in particular has been very weak.
Camille, fantastic to get insights on the Fed and the UK and the debt markets as well. Camille de Courcel, Head of Developed Markets Rate Strategy and European Economics at BNP Paribas Markets 360. Let's bring you an update in terms of AkzoNobel. We know, of course, they're doing this all stock deal with Axalta Coating. It's a cross-border deal, creating a coatings company with an enterprise value of about $25 billion US dollars. On Tradegate, Akzo, of course, the company behind Dulux Paints, is falling down more than 3%. That's on Tradegate versus the close on Amsterdam. Again, on the back of the news that Akzo has agreed to acquire its smaller rival, the paint maker Axalta Coatings, in a cross-border deal, creating a company with enterprise value of $25 billion. Now to the banking space. Deutsche Bank was the worst performer on the Stoxx 600 Banks Index yesterday. This after the German lender unveiled new targets which may prove a high bar to achieve. I'm joined now by Bloomberg's German finance reporter Anna Schutz for the details. Anna, what were the takeaways then? It was a big day for Deutsche Bank and the team there.
Yeah, Deutsche Bank had their investor deep dive yesterday. They talked for the whole afternoon about their new targets for the next 3 years. The main ones being a return on tangible equity of 13% by 2028. That's a hike of 3 percentage points from current more than 10%. Then they're looking to pay out 60% of their profits to shareholders via dividends and buybacks, and they are planning to bring down costs to 60% cost-income ratio. So all in all, well, a set of targets which is, not overly ambitious either, because you have other banks look at UniCredit with 15% return on equity target for this year, BBVA even 17%. No, hold on. UBS 15, UniCredit 17, BBVA 22%. So not overly ambitious. At the same time, Deutsche Bank flagged that its targets are conservative, if you will. They said sort of if they see some banking regulation or some additional stimulus measures, they could well be above that. All in all, investors thought maybe not overly ambitious either, and stock tanked a bit.
Yes, indeed. It was a standout, wasn't it, yesterday, in terms of the losses that came through for Deutsche Bank. Arno, what is next then for this German lender? What are you and the team going to be scrutinising in the weeks and months ahead?
You have to remember that Deutsche Bank comes out of years of restructuring. They had really bad time with lots of regulatory and legal issues. And Christian Sewing, as CEO, has actually turned the lender around, has put it back on a stable footing. And Deutsche Bank basically said yesterday that they're sort of continued to do what they've continue to do what they have done the last couple of years, and that is sort of stabilize, like gradually grow the lender, invest bits and pieces here and there, but no bold M&A moves, no big strategic, changes, and they're going to plow a bit more money into investment banking, hiring senior bankers there, expanding pockets of their fixed income trading business. They're also going to hire 250 wealth managers to push into that more lucrative part of private banking. But all in all, it's no big change. It's basically more of the same.
OK, Bloomberg's Arno Schwetz in Frankfurt. Thank you very much on the update around Deutsche Bank. We'll watch that stock as well at the open today after the sell-off yesterday. Now, some other stories making the news, and talking of wealth management, UBS chairman Colm Kelleher has held talks with US Treasury Secretary Scott Bessent about potentially moving the bank's headquarters to the US. The discussions come amid uncertainty over Switzerland's proposed capital reforms, which could raise UBS's requirements by roughly $26 billion. The Trump administration is said to be receptive, even as UBS continues lobbying to ease the Swiss rules. Apple's iPhone sales, meanwhile, have surged in China, signalling strong momentum in a key market. New research by Counterpoint Research found that iPhones accounted for 1 in every 4 smartphones sold in the country in October. It marks the first time that Apple has hit that threshold since 2022. The figures suggest Apple's upgrades are resonating with consumers and support CEO Tim Cook's prediction that the company will return to growth in China this quarter. Meanwhile, the Apple designer who helped develop the iPhone Air and even starred in its introduction video has left, marking the latest setback for the company's design group. Bloomberg has learned that industrial designer Abhir Chowdhury recently departed Apple for an AI startup. We're told his exit has made waves internally, given his rising profile within the design team. Multiple subsea internet cables through the Red Sea for the Two Africa cable system are yet to be completed due to political tensions and security threats. Meta, which is leading the project, blamed the delays on operational factors, regulatory concerns and geopolitical risk. The hold-ups are disrupting the supply of broadband in underserved countries, causing financial costs for cable owners and investors, and prompting companies to consider alternative routes. Coming up, from billionaires to blue bloods, Britain's richest families rushing to lock down their fortunes. This as tax fears mount ahead of the upcoming budget. We'll bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Britain's richest families are scrambling to protect their fortunes ahead of next week's budget. It will be a new budget, and it will be next week. Rumours and leaks have suggested an exit charge for wealthy Brits leaving the country and increased levies on expensive homes are among tax increases the Chancellor is considering. I'm joined now by Ben Stupples, who's Bloomberg's reporter covering the ultra-wealthy. Ben, we're seeing corporate trustees then replace individuals at a pace not seen in years. That's a pretty significant shift, it seems. What does it tell us about how people and how those with significant wealth are adjusting ahead of this deeply consequential budget?
Yeah, thanks for having me on, Tom. It's corporate trustees. Sounds a little bit technical, right? But broadly what it means is that families are adopting more defensive wealth planning strategies around how they manage their fortunes. If we were to sort of give a sporting analogy, it's putting a couple more defenders at the back and making sure that you're not going to concede anything. And in this case, making sure they're not going to concede any more, I would say, or reduce as much as possible the effects of next week's budget. A crucial thing to point here is that it's not just about next week's budget. This is also about last year's budget that you just mentioned, because the inheritance tax changes that will help with these moves that we're talking about, they're not coming in until next April. So here we've got really wealthy families and up and down the wealth spectrum too, normal business owners that we might count as neighbours in our neighbourhood. They are caught in this sandwich of tax rises next week and tax rises in April, and maybe some even further beyond. We've got pension tax reforms for inheritance tax coming in 2027. So there's a whole sort of more than a triple whammy, I would say, facing business owners. But we're seeing some of the biggest take out also big dividends. Now, we don't know specifically what it's for, but that means it signals, I would say, nonetheless, it signals that there's some sort of wealth management going on behind the scenes, all in preparation of what Rachel Reeves is going to say next week.
Well, it's good news, isn't it, for the wealth advisors and for the legal eagles advising on this, Ben? Some upside there, possibly. Look, there was a lot of hand-wringing, wasn't there, after the latest budget, the previous budget, about exiting the UK and fleeing with capital, high net worth individuals, and then some evidence and some data suggesting it wasn't quite as bad as the doom mongers had suggested. Has that changed? Do things really accelerate? What are you seeing in terms of relocations?
Good question, Tom. We will see officially, for the first time, official data coming out on the sort of current changes that we've had over the last year next August. You're very welcome to have me on then, and we can see the devil in the detail there. In the meantime, we are reporting, as recently as yesterday, we reported overnight pretty much that the top executive of the family office for Qatar's former ruler, basically the top money manager for the Qatar royal family, has left the UK, having been here for a long time, and he's gone back to his native Italy. And we anecdotally have kept seeing consistent cases of influential individuals and ultra high net worth, multi-billionaires in some cases, leaving. And I would say there's definitely a trickle down effect across, Britain's billionaire economy. For a lot of people, they won't be affected by that. But there is a sort of, I would say, a sense of a chill that's going through London's ultra-wealth economy, parts of Mayfair, parts of Chelsea, where you typically see sort of well-heeled individuals who hail from overseas. As I said, we will know officially, though, in August, and I would love to circle back then.
Let's do that, Ben. Great reporting. Fantastic stuff. Thank you very much indeed. Well worth your time, of course, as viewers on Bloomberg.com and on the terminal. Bloomberg's Ben Stupples. Ben, thank you. Now to some other stories making the news this Tuesday. The amount of savings guaranteed by the Bank of England's regulatory arm is to be raised to £120,000 from next month. Savers are guaranteed to get back at least that amount if their financial institution fails. The current cap of £85,000 was set in 2017. And, of course, we've had some inflation since then. Bloomberg has learned, meanwhile, that the EU plans to warn the US against expanding the list of European goods hit with 50% steel and aluminium tariffs. EU officials will press the US to stick to the spirit of the agreement and are pushing for a quota system to lower duties on some metal shipments. The UK, meanwhile, is said to be drawing up countermeasures against the EU's proposed steel tariff increase in the event the government cannot secure a deal to blunt their impact. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So the markets then on tenterhooks. The anxiety is there. Nvidia, of course, the build-up to the earnings on Wednesday, but also expectations, or at least concern, that maybe the Fed doesn't go in December. Chris Wallace says he does want the Fed to go. We know he's on the dovish end of the spectrum. This is how things have adjusted, though. The white line showing the chances of a December cut moving from more than 100% back in October to around 45% right now. So as you move the white line closer to 0% chance, then that is, of course, a risk factor. And you're seeing the inversion in terms of the Nvidia, or at least I should say the Mag 7 moves lower in the last 30 days. You've seen that pressure, of course, across those Mag 7 names, and those two, of course, coming together to cause anxiety across the global equity space. Let's flip the board. Talking of which, the S&P 500 then crossing below its 50-day moving average, breaking that run, 139 sessions, and now it's broken through that 50-day moving average. Interestingly, the team at Goldman Sachs saying that now it's below 6,725, and it closed below that, as you can see yesterday, below 6,725. That could be a level at which the quant funds start to move from buyers to sellers. So is there more pressure? Is there more downside in line for the S&P 500? Let's flip the board and have a look at Bitcoin, which has been something of a canary in the coal mine for the sell-off in the equity markets. You saw that pressure from Bitcoin, and that has filtered now, that risk-off sentiment. You've seen in the month to date, $400 billion of market cap wiped off of Bitcoin, as you've seen some liquidations. And you are also seeing some moves into some strike options, suggesting that some in the space, in the crypto space, see the downside to $80,000. They're seeing strikes of $85,000 and $80,000. So maybe that is the next level that the bears in the crypto space are eyeing after $400 billion was wiped off. And you see further pressure on Bitcoin today. Let's switch focus to some interviews coming up. AkzoNobel's CEO is going to join Opening Trade after announcing a merger with Axalta. Stay tuned for that. Opening Trade is next. This is Bloomberg.